Hey members, it's Kyle from K Capital. This is the second video I am posting for the day. The first was more a generic watch list video, as well as a macro breakdown of the SPX, the Dow, and the Russell. So watch that video first. If you haven't, this video is going to cover our current positions. Just to kind of recap that video, two new watch list stocks are SKYS, which we're looking at here, and HNSN. Both of those are short options, as I break down in that other video, so again, please watch that. It's basically, I am very bearish still in the market, especially on the small cap space. I think the upside here is going to be short-lived, and if history repeats itself, if we shorted every time the stock touched the 200-day moving average, obviously we would be up significant amounts of money. And I think it's going to obviously test this again and then break back down just like it started to Friday. But with that, let's get to our specific stocks that we're already in. SIEN. Again, more of a fundamental thesis here. I think this pulled back, looking at the fib retracement. It's been holding the 50% or 654 price, for now weeks. I still think this is very, very undervalued. It's definitely mispriced in my opinion. It's just a matter of when they release new news regarding the redistribution of their products back into the U.S. and international markets. But as long as we continue to hold this price level and the 50% fib number, I'm going to continue to hold this. So really no updates here. STRL. Wrong STRL. I swear that happens to me at least 4 times a day when I'm looking at this position. It comes up with that index. So SP or STRL here is, again, really no updates. It's holding the 200-day moving average. The volume has been very low, but obviously, we're already in this position. So as long as it holds this price level, we're going to continue to hold this. I think we can definitely see a pop hopefully soon, but really no updates on this. Obviously, with our stop being right around the 4.8s, 4.6s, until we just break through that on high volume, I'm not really going to trade this or sell out of it. The one thing that's nice is the fact that we're continuing to hold both the diagonal trend line here, the 200-day moving average. And you can see we're starting to make a very discernible wave pattern, where if we would have bought at the low of all these waves, you would have definitely been sitting on a decent return. And I think we're at the low of another wave. So again, no updates here. I know it's pretty boring, but swing trading can obviously be pretty boring. Next is CSCO, where I think we're up $4.50 a share or $5. This has been a beautiful trade for us. We bought all the way at the bottom here. We're now testing 29, and again, I think this can easily break through 30. So no updates here. Congrats if you're in that with us. The dividend here alone is definitely going to add to our total return if we end up getting that and holding through the next quarter or so. This, again, pretty boring, but I'll take $5 a share any day of the week. Again, this wasn't really a technical play, as I alluded to when we entered the position. This was more of a, CSCO is a great company, saw the price dip down well into the low 20s, and just figured it was a good opportunity to kind of get some value in the portfolio. Next position is Sandridge, SWHC. So this obviously it's hitting the point to where something has to give. The earnings call was pretty bearish. They have liquidity still. That's the one thing that I think is very bullish, but until oil turns around, there's nothing really they can do. What's interesting is that in the comments, they continue to make really plans to continue to drill in other assets outside of the Mississippi Lime. So to me, that says obviously the company still is willing to put together a long-range plan. They're cutting CapEx. They made the interest payment back in March. So all of those things tell me that the company will survive. Unfortunately, they need to very quickly, and I think by the end of April, come up with a plan so the going concern to the auditors and the SEC is kind of put at rest. So hopefully we get some news on that in the coming weeks, and I think we will. Right now we're obviously just forming a base all the way from 2 cents to 5 cents. Hopefully we see a nice uptick back to 10 this week, now that we saw the sell-off after the earnings call. So again, patience with that. It's an unfortunate play, but this happens. I think our average position is in the 30-cent range. So the goal was an uptick to 50 cents, but obviously that's a long ways away. We just need crude to finally bounce back, and it's just not happening yet. So really just patience with this play as it kind of plays out. On the short side, we have SWHC, or Smith & Wesson. We are short from the 27 range, I think. So we're sitting in a little bit of a loss. They saw some uptick Friday. Really not off of any news. I think it was probably short covering. I am not going to sell this yet. Obviously, if we blow through 28 or 28.50, I'll obviously cover. But right now, I think this position is still oversold. I think the sell-off from a week and a half ago isn't done yet. I still think we're going to see some downward pressure, to 25 to 22. So we'll see how that plays out. With the shorts, you kind of just have to stick to your guns and kind of stick to it, because at the end of the day, it's definitely a difficult position to be in when people are naturally bearish or bullish all the time. To be the one person or very few people that are bearish on a stock is definitely hard to to stomach sometimes. But again, I think this is definitely room to pull back. So more to come on that position. And looking through my watch list here on my phone just to get a sense of where we're at. Okay, so two more positions I wanted to look at are TBOW and Centrus Energy. So TBOW, I chickened out and did not pull the trigger. Naturally, of course, it gaps down. So congrats if you got in that. I clearly missed it. The one thing that I'm watching for, and I alluded to this, I think Thursday and Friday of last week, was the 200-day moving average. We started to test that, but obviously we saw some buyers come in. I think this gap fills. So we're still looking at short. If anyone did short, when I put it on the watch list, which it was around 950 to 960, congrats, you're already sitting on a nice return. I did not pull the trigger, but I'm still looking to do that. And then on the long side is LEU. So this position is definitely something that is making a discernible pattern in the sense that big gap up, wait for the pullback, big gap up, wait for the pullback, big gap up. Same really logic. I want to pull back to the 200-day moving average where we'll look to go long. But right now it looks like buyers already started to come back in. So if the market tanks, which obviously my other video is what I'm thinking it will, this might not be a position we get in, just in the sense that you want to trade with the overall market, but we'll see what happens in the near term, Monday, to see where this opens up. But again, it looks like it's making a nice pattern, something that we can probably take advantage of if we do test the 200-day moving average. So that's it. 2 videos for the day, heading into the week. A lot of opportunities out there on the short side, so it's something that, stay tuned, look for the alerts, and I will talk to you guys in the morning.